Big tech takes center stage as four of the Magnificent Seven report earnings this week. Microsoft, Meta, Tesla, and Apple. What is in store in those reports? And beyond tech, we've got a parade of blue chip earnings from Boeing to Caterpillar, plus the Fed's first policy decision of 2026, and maybe Jay Powell's last meeting. And geopolitical uncertainty intensifies with the political government shutdown looming Friday, with tariff policy creating crosscurrents for the global trade. Let's dive in. It's the CB3 Weekly Podcast, and it begins now. This is arguably the biggest earnings week of the quarter. Four of the Mag 7 report in a 48-hour window, with more than 300 companies on deck overall, including 102 S&P 500 members. I'll report in detail on this for the February show, but for now, let's watch Microsoft, expecting to deliver earnings of $3.88 on $80 billion of revenue. That's year-over-year growth of 20%. Meta is projecting $8.15 per share on a $58.4 billion in revenue year. It's just astounding how these Magnificent Seven companies continue to generate revenue. People say to me, and I'm taking a sidebar from my script, that we're just in a bubble just like we were in 2000 or even 2008. Folks, the earnings reports for these Magnificent Seven companies are proof in the pudding that this is for real. So revenue growth remains robust at over 20%, but all eyes will be on their AI cap expenditure guidance after they raised projections 3 times last year, and they continue to grow from there. Third, Tesla faces the toughest setup. Wall Street expects earnings to decline by 40%, and if they decline less than that, that actually will be a boost for the stock. That's the way it works. If you lose less than what Wall Street is expecting, that could be a bump higher in Tesla, which we would like to see, of course. Apple reports Thursday, and investors will parse the iPhone demand, which has been surprisingly strong for the iPhone 17, and then upcoming Siri improvements and other hardware that's in line with Apple. But there's been tremendous turnover at Apple, so there are concerns there. We are watching all of this. All of the stocks I just mentioned are in the DS, Discretionary Strategies, CB3 program. If you are not in DS, or you want to review whether you need a larger position, because this is where all the Magnificent Seven stocks lies in our DS program, please give me a call or cb3@cb3.com. So the Federal Reserve meets Tuesday and Wednesday with a policy decision coming Wednesday afternoon. This is typical. It happens at 1300 or 1 p.m. Wednesday afternoon Central Time. Markets are pricing in a near certainty that the Fed will hold rates steady with a range of 3.5 to 3 3/4. This is the first meeting of 2026, and we'll see 4 new regional Fed presidents rotating on the voting committee. Notably, we'll lose 2 of the hawks who descended in December, Chicago's Goolsbee and Kansas City Schmidt. And so we're rotating in more dovish members, which might be favorable to getting the rate decreases that President Trump wants. The December dot plot projected just one more 25 basis point cut for this year, bringing the terminal rate towards 3 1/4. With Fed Chairman Powell's term expiring in May, I think we could see a couple this year. As recently as 3 months ago, I thought we might see 3 this year, but I just don't see that happening because inflation is just not dropping at the rate that we would like to see it. It's not a concern, in my opinion, but it's not dropping at the rate we'd like to see it. So beyond the Fed, we have substantial earnings outside of tech, including Boeing, Caterpillar, General Motors, and others. Financials include Visa, MasterCard, American Express. We own a lot of these, although not all of them. And then in energy, Exxon and Chevron close out the week. So this earnings season tests the narrative that the market breadth is improving. We believe it is. We got stung a little bit last year because the market breadth was so narrow. It wasn't just the S&P 500 essentially becoming the Mag 7 plus the S&P 493. There were only 2 stocks in the Mag 7 that outperformed the rest of them, and that was NVIDIA and Google. So those sort of disparities, I would hope, are going to get resolved this year as we see more market breadth with the rest of the S&P 500 participating. So there are 2 major geopolitical factors that are creating uncertainty this week. First, the government funding deadline. Here we are again. It seems like we can never get away from these funding shutdowns. After November's record 43-day shutdown, Congress has been making progress, and they really need to, because the American public was angered by this 43-day longest shutdown in history. And why do these keep happening? Because they just keep kicking the can down the road. Both sides of the aisle, Republicans and Democrats, can't seem to find a budget agreement here, and this is just going to continue. It's nothing new, but it is extremely frustrating to those of us that are consumers, and also those of us that are managers of money here. So the second issue is tariff policy continues to evolve. So we have this import rate of 14%, the highest since the Great Depression. Mexico has now imposed tariffs up to 35% on 1,400 Chinese products, effectively closing this back door that companies have been using to route goods through Mexico to avoid the tariffs on China. This comes just 6 months before the trade agreement is set to be reviewed in July. So world trade is clearly a topic, and this is a very volatile topic for the market. You saw what happened last week on Tuesday when the market opened and gapped down big time because Trump was imposing tariffs on Europe because of the Greenland deal, or the lack of the Greenland deal. So meanwhile, this is going to continue. We do see NVIDIA, that day was wiped out to the tune of $600 billion, but it has strongly recovered since then. So I can't overemphasize the importance of watching these tariffs. We're doing it for you as your money manager, but realize it's what we have to do to keep your accounts invested in the market, not to be scared, but to be wise and not overly exposed to too many companies that are sensitive to tariff fluctuations. So the S&P 500 hit record highs earlier this month. It's currently trading at 69.55 this morning, up about 1.5% on the year. CG is stronger than that, and we're glad to see that. Goldman Sachs is projecting a 12% total return for 2026, and I'm pretty much in line with that, although they're noting elevated valuations that are increasing downside risk if results disappoint. So this week gives us good data points to assess that outlook, big tech earnings, what's going to happen with the government shutdown, and what's going to happen with Fed policy on Wednesday. So that's your week ahead. We will be back in 2 weeks and a few days for the February edition of CB3 Live. We hope you'll join us then. Have a great rest of the week. We'll see you next time.